think.
Yes, okay.
Yeah, okay, good. When we looked at supply and demand, right, we always took the law of the candle
Yes.
and marked it out in time, right? So basically like this, for example, in this example, or we take this order book sweep here and you see it tests it, right? But what's also important, what I didn't know until Friday, and I backtested this a lot now, is that the close of the highest volume bar in each session is as much important as the open, even more important, because at the close is basically where all the algos are dealing, right?
Okay.
So we take the close of the candle and the high of the highest volume candle for each session, and this becomes a buy side above, sell side below level. So we can be buy side above or sell side below, like for this instance here, right? This is now a 1 hour chart, but if I go down into the 5 minute and go back to exactly the same level, right? You can actually see that we get some type of rejection from this level now. So this gives us a little bit of confidence to work with. And we can also see, okay, we have a top edge. Of course, we could now look at value, right? We could take the our Bob line and we could just say, okay, what is the RBOB doing in this present moment? And if we just look at this, there is no real divergence at the moment. So there is no real trade, but of course you can look at several other factors like what could be a good the US 10s and the 10s twos. We can see how these are responding, and you see obviously this is like your sell trade, right? This is the sell trade because you have your level. This is your key level. You have value immensely in your favor, right? Because this low here is not taken out yet. So this price is going higher than the curve, and look what happens to the curve, right? The curve is just dropping down. So this is a possible sell opportunity, and it sells off quite beautiful. No? So
Yeah.
this alone can be a good trade for each session at least. And we also have, of course, the seller's auction. It still suggests that sellers are coming into price, and eventually the shutdown is here in this large candle. And you can do this on any time frame, but for this exercise, I just want you to focus on the 1 hour because the 1 hour chart is your macro picture. So this is where the meat is at basically, right? So what we're gonna do now is we won't do a lot of stuff, but we will just take a look at from this point to this point onwards. Basically, we will look at high volume candles and here mark them out in time and look how they correspond to the present time. Okay, so what we do is take these lines now, and I will just be quiet for a moment and just draw everything in. Okay,
Yes.
so just draw that out, and you see this level already. I mean, it makes a lot of sense because if we buy set above this level, then if it's a buy set above sell side below level, you know, okay, below this low, there's probably commercial buying, right? So this stop run is also now a good place to start buying and even into these retests here. So you see how this level is responding, right? I mean, it's quite nicely because you have this range established. And then look how price reacts from all these different levels, like here, comes down, pins it, comes back into the range, pins it, trades in this range and breaks out finally. And when we got the breakout, you can now start to look for longs, and look, you get like one full day of longs. We hit the other level now, which is this one, and look what happens. We sell off from this level, right? Look, we come back, we test it. Now suddenly, look, it can pin above it, but most of the time, like I said, these are where commercials are actually dealing, like above these levels and below these levels, because we have liquidity, so it wouldn't make much sense to just bounce off here. They of course run the stops here because stops are here, here, placed wherever. They run them, and boom, they return, right? And look, return back to the bottom. We go even lower now. So now we have another, this is not so high volume. I won't mark this one out, but this one is quite important. This open here, and this is just a stumpy bar without a pin. So I just draw a line. I just draw the line here, and look how price trades through it. Boom, boom, holds above it, goes below it. And this is a 1 hour chart, 1 hour chart. You have to remember, this is on a 5 minute. These are a lot of scalp trades, you know, like look, this sell here, boom, goes all the way down to the bottom. Now you can mark out the high, of course, and look what happens. You can build an idea. You can say, okay, I'm selling this, but if this is on high volume and pulls back, I can actually buy the retest here, and it comes close to this here. You can, of course, mark out this OB here and say, okay, just for confluence, you know, so it's established a bigger range, because this is some type of catalyst. This price, this down candle was a catalyst for something to happen. And then, of course, you know, like always, we can take the 50 pullback, and it depends where you draw your fib on. If you draw your fib on this low, it's okay. If you draw your fib on this low, it's okay too, you know, because it doesn't really matter, right? You can even draw it on this low here, like at least you have the range. You need to establish this range. You need to know, okay, where is the biggest range? Like if I put it like this, right, when I take it on this low here and I don't count this stop run in, then it's also the 50, right? So it doesn't really matter how you place your fib. You just have to make sure that you have an area, right? Institutions, they trade areas. So you basically just look at it like from a point of an area, and then you have the top edge, and this is kind of the area. Then you take your projection up like from here to here. The projection is the -2 level. Guess what? It gets hit, right? Boom. Trade is selling off a little bit. Profit taking. Depends on what you're, of course, doing, but let's say it doesn't matter. I just draw out these lines now because I'm just going, I'm just seeing this stuff, you know.
I was watching the Bank Nifty spot chart at the balance area. If
Yeah,
you
this one.
go through the, yes, if you go through that, so I can explain what is the problem of the balance area. I look Bank Nifty spot chart, not future.
What do you mean?
What I'm saying that if you can go to Bank Nifty spot chart, so I can tell you there is a problem for balance area, that what I see.
Yeah, okay. Let's go to Nifty later. Okay, let's go at the end to the Nifty, because let's not focus on the Nifty so much, but more on oil. Okay, because you can trade.
But if you go through, so there is a problem of balance area that I can ask particular question in that same. I mean, there is a clarity for the balance area for me. Not a future. Please go to the spot chart.
How is it called?
Bank Nifty. If you write Bank
Nifty.
Yes,
this
first one. Yes. So yes. Now go to last day. Now here you can see. Yes, little bit back, 5 minutes. So if the 13 of October is my balance area, you can see price then just dip down.
Yeah.
Yes, and it is below the 50. So how I can like sure that this will be going to happen?
Well, you have to think about it, right? From a perspective like we don't see this price action here, but what are we doing, right? We have no volume on this chart, so how can we identify anything, right? We can't see anything if we don't have volume. Like if I tell you now, okay, where would you like to deal, right? You have this order book sweep, okay? This is one sign, okay? You have this order book sweep here. This is the order book sweep at the open. But where
Yes.
is the volume? Where is the volume? You have no volume on this chart, right? If I put volume on, there is no volume.
No,
It doesn't,
yes.
it doesn't, as a trader, you need to know where volume is. I don't say you needed to trade it, but it makes it easier, you know, because this candle here, right? This candle here is probably a high volume candle. It has to be, you see, it has to
Yes.
be, because they run a lot of stops here. So they ran out this stop here on high volume. So what can you do? You can actually mark out the open or the close. It doesn't really matter, right? And if you do this like we practiced like a lot of times, right? Mark out this
Yes.
candle and look how this candle is holding.
Yes.
Like it's on a 15-minute, but you have to be a little bit of mindful about this concept, because in the end, if you just say, okay, this low and this high is my balance area, you can't do this type of stuff, right? You just have a
Yes.
25, you have a 25, and if you have a 25, you have a squeeze trade, and the squeeze goes almost for the -1, not close, but like, of course you can't say this is right, but this again becomes your 50, right? I mean, if you take this low, this swing high, this is your balance area. Price is rejecting this area, so this is not something new. I mean, you can't take this low, this high here, like this here. It doesn't make any difference, because you have to know what is this candle here doing actually, okay? And what I realized is oftentimes that not the opening candle, right?
Actually,
Is
the problem was if you look just before that candle, there is a
for
double
this candle.
bottom. Yes, there is a double bottom kind of structure. So I thought that the 50 is holding just before that that
Okay.
candle.
But the
Yes.
problem
So,
is
but yes,
there is one problem. After this
yes,
open, do you see any
yes,
significant volume here? 630,
yes,
645, 7, 715, 30, 8, 8, 8. Okay, 8. We come into 8. We got 815, right? This is
yes,
approximately the London Open.
yes,
So, okay, let's see. Let's use something for confidence. Let's take oil. Let's take oil for confidence. Put it on auto. Scroll in here. It's messy, so I might just add an indicator on it if I have the ability to do that. Moving average. Yeah, just take it like this. Put it in black, big black line. And I delete this chart here. So if we go bar by bar, right, it looks messy now. Wait, this is obviously not so good, but we can, yeah, we can do this like this. So, wait, this is Pollock's. Yeah, this looks kind of better. So in this moment, okay, oil didn't give much because oil was making lower lows until this day. It bounced the Nifty. This is the opening candle on the Nifty, right?
yes,
So what we learned from the oil section is we mark out the high on the highest open. This is actually the highest open candle here. So this becomes our RGL, right? Red green level, which is buy side above, sell side below. So
yes,
let's see what happens. We mark this out. Oil is up, right? Oil is up. We can see that. We can see that. We can see that. We can see that. We're not stupid. We can see the hold. We can see the hold of the level. We can see the hold of the level. We can see the hold. Look at this candle, order book sweep, right?
yes,
OBS. You can enter at the close. If you are aggressive enough, you can enter at the close of this bar, at the close actually, with a stop loss just below this candle. And guess what? You're in the trade.
yes,
This is the algo trade basically, because this is the catalyst now. And this level here, look what you did. You just identified an area, right? And if I go to the 1 minute chart, it's just the 50 from this little price area. Like if I draw the fib from swing high to swing low, this approximately is the 50. You see that?
yes,
And now look, we go up, we go up, we go up. The 1.5, the twos, boom, the 2 got hit. This is your exit candle. If you want to exit, enter at the 50, of course. Of course, you can hold for the rest of the portion, but it's not necessary. And now you saw how this trade just developed, right? From one single level. Like I didn't make it up. Like, you know, this is just
So I
This
should
is-
not buy below the 50 if it's so in the form of wig. So
It-
I should
it-
avoid.
you can wait. I don't say you have to, but you see this price is railing and it's holding higher. So when it's already rallied like this, right? Why would they sell it all the way down here? It's just a higher hold on a higher time frame. It's again the 25, you know. Now it's holding
So
above the 50.
When I just want to ask you when to put the buy button in this scene.
The what there?
When to click the buy button in this scene.
You have to
Just
know when to
moment.
click the buy button. Like you
Because-
you have to see all these things. Like you have to see this volume candle. You have to build an idea around this volume candle about this type of concepts. I mean, I press the buy button often. You know, I rarely get the best price. Like I don't get top edge. I get maybe like this price here, and then it sells off. Right? I take some profits. I go break even. It comes back. I might sell this one here, and I scratch it out, right? Because it pulls just back. And then I sell here, and then it goes eventually in my direction. But like I said, you always have to. Sometimes you have to work a
I
little
can't
bit. You
just
know,
perfect my trade. This is like nonsense to always looking for the perfect price.
there is no perfect trade. Like the perfect
Yes.
trade is what you see and what you believe, and this is the perfect trade. Because if you believe in these concepts, right, then you will also trade like you would have known. Because look, I know you like the Nifty, so we're just gonna focus on the Nifty, okay? We're just gonna focus
No,
on the
no,
Nifty.
just go back. My confusion was clear that about the balance area. So
Yeah.
now go back to your original concept.
No problem, but look, I just want to show you something. It has to work in every market probably because it's key. Look, I don't know what's gonna happen to the right, but this level here will give us either a sell or a buying opportunity. This level here, this little level, these two lines, look, it will either give us a buy. I don't know what it's gonna do, but it's gonna do something. It will have something in it. And look,
So
comes up.
when to know that this line is going to hold upside and like
This is a
strong
1 hour
power
chart.
candle-
This is a
strong
1 hour
power
chart.
candle. For what I should wait? Rejection or strong power candle for what?
What is this from this level here? If you see this pin bar, what
So
is a pin
rejection.
bar?
Yes,
It's probably a
rejection.
buy. Look. Do you see it?
Yes.
Do you see the higher highs? The higher highs coming in. Look, market structure is making, this was more of a rejection, but look, we failed to rotate all the way to the bottom, right? Like you have your balance area, right? Again, this level,
Yes.
key level, I put this in pink now, just to know where the key level is. And this is, remember, a 1 hour chart. Swing high, swing low. Where is the 50 hold? Do you see the 50 hold? Do you see the order book sweep inside the 50 hold? Look, you get this doji candle, the squat candle, right?
Yes.
This candle here. You see it inside the 50, it's right in the 50. And once this breaks, it will go in one direction. So you can put a, if this is your bias is long because you saw this rejection, right? You say, okay, this is interesting. We hold above the 50, interesting. We make an higher high, but we reject back in. So you would wait. You see, again, at 50 bounce, comes back 50 bounce. It comes back at 50 bounce. This time it takes out previous high and low.
Yes.
So this makes it an order book sweep. Plus it's a doji, so you know this is an energy bar. There is sellers and buyers from above and below the marketplace. So you can expect one of both, and either way the candle is breaking. You see in this green candle, it's breaking to the upside into the close, right?
Yes.
The following day, it just trades higher, fully blessed, you know. And this is your trade. Like you can take your long here. Like I know this is not a macro trade, like somehow, but you wait for the breakout of this candle, you get into the trade, and your target is obviously the -1 projection, which gets hit perfectly. So this could have been your trade. It could have. I'm not saying you should take this trade because
So,
the stop loss is
how
probably a
much
little bit big,
possibility
right? But
that, yes, what is the possibility that this order book sweep candle always form at near 50?
I don't know. You have to backtest it. This is the thing with the market. You just get as much as you train to see. You know, like when I got weekend, when I'm on the weekend, I'm not available. Like yesterday I went out with a friend, you know, but once I'm coming home, nothing except charts. Like I'm watching the chart and I'm just looking at the past, just like this. I'm looking at all of my markets just to try and see the bigger picture, and I try to understand all these things, right? So let's just go. We have the -1. Yeah.
Yes. There is a volume. If I wait for the volume, like
Yep.
large volume candle, then I will buy. So so the volume is not come here like large red volume.
Yeah, but this is the thing. This is a 1 hour chart, right? This is your macro time frame. Actually, you see the volume is dropping off right into the lows.
Yes.
This is a buyer's auction, obviously. And then you see this pin bar rejection from the bottom, from this key level, which is a red-green level, right? This pink line. You already
Yes.
know, okay, if you see this candle, what is the probability that the next candle will be green, right? It's probably high probability. And look, we test. If I get down, right, this level is close, really close. It's not hitting it perfectly, but it's rejecting, right? So once this comes down, it's again a low volume retest, and the next bar, look, the next bar is opening, right? So we just mark out the open of the candle of the daily opens now in blue, dark blue. And this is most of the time the directional candle. The opening candle is the direction, okay, or for the day. So imagine this. You take the open from this candle, right? This is the direction for the day, and look what happens. This was the direction for the day, right? Oh, look, this is the direction for the day. Look what happens. It comes a little bit of buy side into the close. Now, next candle, it opens. Okay, it's kind of stumpy, but anyway, we mark at the open and we look. It's kind of a mixed day, right? But this is just, you don't look individually at these lines, right? You just try to make sense of these. It's not like you trade these lines, you trade all of these elements. Like it is not only the key level, it's the key level, the rejection that you're seeing, the volume, the auction coming in, right? The seller at the buyer's auction, the pin bars at the bottom, then the 50 hold here, the order book sweep, the breakout, you know, like the value. If you have value on your charts, I won't look at value for this because I know you struggle, and maybe I'm gonna struggle too because it's not that accurate like in other markets. That's why I try to use oil. But then you see the -1 projection, the gap fill, right? This is your exit point. This is your exit point. Look into the close. You hold your trade for 1 day, you get big profits, no drawdown. Boom, you close your trade. Look what happens next day. Boom, you're already gone, right? Your trade is busted. So we think sell side below. Look what happens. It goes above, it closes the gap, and then it comes down again. So let's. Oh man, what the fuck? I think that's bollocks, but okay. I will just transfer this line now all the time. Now look what happens. We're sell side below, right? We open here. We're sell side. We're sell side here. Sell side. We're still above this level here. So we trade above it, trade above it, trade above it, higher, lower, higher. Look what happens. We trade back into this level, right? And look at the rejection. Do you see it? It doesn't have to pin it. It can go below it. And when it goes below it and pins, it's even better. Like on oil, it's the same thing on oil. Look, where is my oil chart? Just to show you that it's literally the same thing, you know, like I have to go back a lot of times, but like, where is it? Where is it? Here, like here, you see, this is high volume. It goes below it, but look what it does when it goes below it. It goes instantly higher. And this is the same on the Nifty, right? I mean, it just did the same thing. If I go back here, it is here. It goes below this line and it pops up to the upside, right? And look where it comes back to this close here, whatever, you know. You can also say it's this volume's candle doesn't matter, you know, it doesn't matter. It's just about the picture that you have this level. I just want to teach you this, that these levels are key, okay? So you have to use this one in confluence, basically. So let's look what this level is giving up. Because this is the highest volume level, and I just really try to mark out the best levels possible. I can mark out this level here, like this hold here, like for example, I will just do it. And you already see the trade idea, right? Probably can see it. Look what happens all the time when we go below this level, right? It's buying, right? These are all rejections and then green candles. Eventually, at some point, the market must go higher because these are all buyers below this level here, all commercial buyers. And if you take this low and this high here, you also get a 50 hold, right? A higher hold, basically. Again,
Only
it's
problem is this 50, when to understand that 50 is hold and price will not target below liquidity. This is the only problem for me.
this is the thing you have. This is why you have your trades mostly break even, because you never know, except if you have a good value on your charts, which I can't find for the Nifty. This is the problem which I have on the Nifty. That's why I don't look at it too often, but it's a lot of structure involved. You see, this is the big 50, right?
Yes.
And now if I go all the way down to this low here, we have a new balance area.
Yes.
And this 25 becomes now another 50, right?
Yes.
So what is the probability for the next day? What is, you have this red green level, high volume, we bounce off the 50, right? We come up, now we trade on this day, we trade above the 25, right? And we pin the 25 with this rejection here, this rejection. What is likely going to happen? You always have to think in probabilities, in possibilities. Probability is this a high probability trade? Is this a low probability trade? Because look, what happened here initially is really, they took the stops. They didn't took the buy side liquidity, right? Like ICT likes to tell, they took the sell side, right?
Yes.
But they only pinned it, so it comes back to the range. This is now not a new low form. This is not a lower low because it rejected. The candle close is not, it's not holding. It's not looking like this here. It's not like it's going down. Then it holds you below this level, because if it holds you, it's likely to go down again.
Yes. It
But
means there is a orders of commercials.
this is, yeah, this is just commercial activity, because look, commercials are like this. They don't get the best price, right? They say, I buy a little bit here, I buy a little bit more here, I buy a lot of here. And here at the top, they just say, I'm gonna buy really just a little bit. And once it comes down again, they start to buy, it comes back up. They don't buy as much here as they buy here, right? And this is where they actually buy the most. And look what happens. Once this pin forms, it doesn't make a lower low anymore, right? This suggests you something, that somebody is actually buying below the 50. I mean, above the big 50, but below the small 50, right?
So,
you can,
this, what I observed, that this liquidity area formed just after the like here, first it got high volume green candle. Then when retracing, then it forms like a one upside liquidity above and one below side liquidity. So like in first chart you share to me, that first it target low, then up, then goes into like a balance area, then goes up.
you know, yeah, it always depends which liquidity gets targeted, but you have to be, how can I say, mindful of the concept that liquidity is the driver for the market. You need liquidity in order to move the market. There is no way that they will not take a side of liquidity, you know. They have to take,
Here, if you see, there is also a liquidity level below that.
here.
There is also, yes, below this, there is also liquidity level, small candle. That
small
small
candle.
candle, yeah.
I
So,
wouldn't count that as liquidity for me personally, because it's not a fractal, it's not a swing low, because a swing low is an area of liquidity. It's not that this is the biggest liquidity, it's an area of liquidity, right? And look, this is an area of liquidity, and together this becomes just paycheck. You see, this becomes just paycheck now.
Yes.
So you have to be, because you want to buy C liquidity, paycheck liquidity, right? This is 1, 2, 3 paychecks. It goes down, it takes all these stops. And this is what institutional accumulation looks like. You just have to, how can I say, just build an idea. This is the key. You have to always think in terms of ideas. Like if you,
Yes.
you can't say for certain which direction the market will go, but you can build an idea. What if the market holds above the 50, rejects this? Like if I just say it like this, okay, we see some buyers, but what is my macro picture, right? If I go out and I look at the macro picture, I'm saying, yeah, we are high, right? But if we're holding higher, what is the probability that this price is going to reverse of this price level? It's almost, it's, I wouldn't count on it, right? Especially if I have some type of value in my favor. I don't know if I take now oil for this instance, like I don't know if it's accurate or not, like it's not that accurate. But you see, when I see oil bullish, right? When I see oil is bullish, when I see this type of stuff, right? And I just see this here, right? This peak, okay? This is no peak, this is just a peak because of the time. I'm not a seller until this curve starts to flatten, you see?
Yes.
Like this is where I would like to see eventually some selling. And then it's important to see where would you like to sell? Like, for example, I mark out this level, this key level here now, this red green level, because it's likely gonna get retested. It should be retested because institutions, they need to accumulate, right? And look, it doesn't come all the way here, but you see just how the curve flattens a little bit, and this just causes a sell-off in the Nifty, right? Now we're making higher high here, but the Nifty is not making any higher highs. So you could say, okay, what stocks are not making actually an higher high, right? And then you can look, of course, at the RBOB, and the RBOB is also making a higher high. So this is of no use, but you can look at the US 10s and the 2s, and you see the US 10s, 2s, they still go up, and you can
If
use
you see IN10Y only, but it's so.
the Indian 10s. If you only use the Indian 10s, I don't know what's gonna happen. We're gonna see. We're gonna hit to a no scale full screen. Yeah, obviously it's already dropping right from this point. So the Nifty is so the Nifty isn't dropping actually, but the yield is dropping at this point. So these are now you have a better value, of course, because you have this swing high. I can even like kind of form it like this. If you look at the bigger picture from the 1 hour standpoint, you want to sell top edges after the squeeze because sure, this is your buy opportunity down here right now, because why wouldn't you buy it? Like, of course, the value is always a little bit jiggy, but it's holding here, right? The value is kicking to the upside. Like if I zoom out the marketplace, I have to auto adjust it. This is